Okay, good morning and happy Friday. We were talking about it, and I think everybody is excited that it's Friday this week. So I am Cassandra Rosas. I started Rosas Financial Solutions because my husband was scammed by a credit restoration company. That's like something that's notorious in the industry. There's a lot of bad people, and we were even talking before this about how some of the legal or political changes could impact my business in December. So there's so many bad that they're trying to ban the industry altogether. But there are some good. And so that is something that is dear to my heart because some people, if they did not have credit restoration services, they couldn't have got a home, they couldn't have got a business loan. And there's so much more. So, like I said, my husband, he had 2 different accounts on his credit report that were killing his credit. It was a student loan that had gone delinquent, and then a credit card that he didn't know how to use when he was 18. He let it default. He didn't have any financial education from his parents, so it was just kind of a free-for-all situation once he got out into the real world. So when we were attempting to buy a home, and I realized, hey, his credit is not very great. Mine was pretty decent. I had a credit card from K's, and that's kind of what I just went off of because my best friend told me, hey, you should probably build your credit, and I got a K's card, so you should too. So I really didn't know much about it, right? I didn't have financial literacy taught to me either. It's not taught in schools. It's not taught in college. It's not taught anywhere really. You got to figure it out. And even though it doesn't seem like that long ago, but in 2013, YouTube was still primarily like music videos and dances and not really educational platform. So I just had to kind of wing it to figure it out on my own too. So whenever I figured out that my husband's credit score was drastically lower than mine, we had to figure out how to fix this issue. So my husband sees this company called Top Flight Assistance out of California, and they're promising that they'll get this stuff off his credit report, they'll fix it, and we will be able to buy that house. Well, $2,000 later in a year, nothing happened. So at that point, I didn't really want to spend any more money on it because we had already been scammed. At this time, I was in my master's program, and I'm like, hey, I do research all the time. I can research this and figure it out. Turns out I was really good at it. So from here, I was a stay-at-home mom, finishing my master's and starting my doctorate. And I said, hey, I think I could help people if I started doing this on a regular basis. So that's how Rosas Financial came. Really didn't put much thought into it, obviously, with the name, but here we are today. So I started my business 5 years ago. I've helped over 1,500 people with their credit reports. I've lost count on the number of homes that I've helped sell or help people get approved for. And then, of course, home auto loans. I have a lot of business owners, right? So you may have ran into that issue where you're trying to get a business loan and you cannot qualify because of your credit. Well, a car loan is easy to get. A home loan is a little bit harder. A business loan, I feel like it's one of the hardest things that you need to obtain. You have to have your information correct and you cannot show risk because at that point, it's a big risk for the bank. What are they going to get, right? So credit has kind of just evolved my life since then. I continue my education in it. I constantly try to stay up with the laws and the regulations and the changes. And then, of course, I do different community events like this. I partnered with Chuck for a few times where we go and we speak at like Goodwill, help those individuals that need specific credit help, not necessarily for business, but just help in general. So, of course, if you ever have questions, reach out to me. And then I would like to pass it to Chuck.
All right, yes, so I'm going to make sure if you haven't signed, please sign because we have to kind of keep track of those kind of things. All right, so because the first time I met Cassandra was at a business expo. It's just like you meet many people. I talked to dozens and dozens of people at those kind of events, but I am so happy that she came to say hello to me and we got to, because she's a wealth of information. So she's being a little humble about how she got to her business started. But if you need help, you need an answer, you ask her, and she's going to be able to give you not just one particular potential solution. It may be several, or be honest with you if it's just not going to happen. So this way you're getting an honest, true person that's on your side. She's actually on your side. So I want to say thank you to her because we have done several events. In fact, one of the last ones we did, we started out with a seminar, a workshop, just kind of an informational type of thing. And before we got it done, it almost really turned into a workshop. People were asking questions. So we thought, well, this time, let's make it a little bit more of a workshop. So we brought some handouts. We'll probably give you some content. We'll go in as deep as you want to in some of it, but we made us kind of work through some of it pretty quickly. So you can ask either a specific question. Everybody either knows, it's either themselves, or knows somebody, their friend, or their neighbor, or somebody's in a scenario that you might be some insight. Want to use. So my point is to kind of bounce off of what Cassandra said. I believe she's probably right. That business loan, people have the thought that I got this great business idea, I just need to go talk to the people who have money and I'll get this loan. Actually, way more complicated because even a house has full collateral, right? Everyone in the house must have it praises properly. And so the bank is even more likely to do that than that business loan. The business loan requires a commitment and a degree of analysis and understanding about what is happening there. And they need, and that banker, that lender needs to know that from them. So when we help people get those loans or try to help them put those packages together, we are often amazed at when some of the groundwork that hasn't really been handled yet. And some of the most challenging things we deal with at the SBDC and helping that person understand, I'm not really saying no, this is never going to happen, but it's not going to happen by next Friday. And we need to think of what all needs to occur. In fact, I pointed out that we regularly great opportunity. Had this struggling along a year or so, they had this great opportunity come along. Now, well, I understand, hey, chance to grow, I have this equipment, where do I have to go to sign to get my grant, get my loan? This is fantastic. Let me just explain it to you, and you will be on board for sure. But in reality, that's the part where you've got to do the groundwork beforehand if you want to have that unexpected opportunity not pass by. So that's what we're hoping to do here, is just help you understand some of those basics and some of those things that could make a lot more difference than you might know first to the very beginning. So as was mentioned, I'm joking, we're just next door, free services. We're through Texas Tech, we get grant funded. So we can provide one-on-one consulting. We do a lot of industry research as well. And so we'll help you figure out what that business plan looks like and how to get that information together. And say sometimes the goal is to get that business funded, and sometimes it's to help you understand that maybe not be as that enterprise not be as profitable as you hoped. And so we want you to know that too. I want you to risk your retirement and life savings on something and without understanding exactly what to expect. So thank you for coming today. I think West Texas Small Business Summit, I've done several things for them over the last 3 years. I think it's a great resource, and the videos that they record should be even more around or circulated. So please do that so that more can find out about the kinds of things that SPAG and that group does. Thank you, a lot of great one. Okay, all right, we'll move to the content piece. Okay.
Okay, so as Chuck mentioned, our last presentation turned into a workshop, right? So I want this to be a safe space, and I want everyone to realize if you look at your credit report and you are scared or embarrassed to ask questions, please do not be. If more people had that hard conversation about what was truly happening behind closed doors, there would not be as many people in the situations that they are. Just like me, just like my husband, right? We had our story. If we had my brother open up about how he was drowning in debt, right? He's probably going to hate me if he sees this recording. But if he would have been open about that, I could have known, hey, don't get in debt. If I could have had someone tell me, hey, don't use credit cards and rack up all this debt, I might not have done that, right? So if we had more of those hard conversations, maybe we wouldn't be in the financial situations that we have been in. So if you look at your credit reports, whenever we get there, and you're like, hey, I want to talk to Cassandra about this in private, just know the person next to you might be experiencing the same thing. So at our last one, that's kind of what happened. All it took was for one question, one person to speak up. And then next thing you know, everybody was pulling out their phones, getting their credit reports, asking questions. That person was like, hey, mine's exactly like that. And next thing you know, it was like, oh my gosh, if all these people would have just had a conversation together, it wouldn't have been that situation. So for today's roadmap, we're going to go through our presentation and talk about the information on the credit reports. But then we're going to get into the actual viewpoint of looking at the report, pulling the report, analyzing it. Do items need to be restored, building that, and then going into funding? So we'll talk about that in the slides, and then we'll leave some time towards the end for questions and actually pulling the report, looking at it, and asking the questions. Oh, you can go to the next one before I mess it up. So what is creditworthiness? I like to say it's your adult report card for your finances. It shows the bank, are you a risk? If they gave you the money, are you going to default on this money? So you can kind of see, I put a meme here. You have a pre-existing condition and it's your credit score. And a lot of people have that pre-existing condition. Credit really hasn't been around that long, right? My mom, we just did an interview together whenever I took her to California. And in our podcast that we did together, I'm like, Mom, why did you not teach me about credit? Well, credit really wasn't a thing whenever she was a kid. And then it really came out whenever she was in high school, getting out of high school, and it was brand new, and it definitely it's not what it is today. You would have to go to a shop on Broadway to go get a paper report if you wanted to see your credit report. So it's evolved over time, and it's not necessarily that they failed to teach us, it's that they didn't know either. So creditworthiness 100% is how you handle your finances. And this is a big thing that I want you to remember. If you cannot handle your personal finances, you will have a hard time handling your business finances. Okay? So at the bank, you're wondering, why do they need to look at my personal? Because they need to see how you are, especially if you're coming in as a beginner, you have a business plan, you're wanting to get funding to get it started. They have to look at something. There's no cash revenue coming in. This is all hypothetical. So they have to look at something. So they look at your personal report. If you're missing payments on a $300 credit card, or you've had a repossession on an auto loan, do you think you can handle a $200,000 loan to start a business? Probably not. And you just have to look at it as the bank's point of view and not necessarily looking at it at the consumer side. So why personal credit matters? Of course, business, right? However, it impacts jobs. So if you're trying to apply for a job at a bank, you're not going to get hired if you have really bad credit. If you're trying to get car insurance, it's going to impact your premium. So whenever I work on somebody's credit, whenever I'm finished, I always tell them, please call your insurance agent and ask them to re-pull your credit because it's an alphabetical rating, and then they can go through and help your premium on your car insurance. So instead of you being an F, you can then be an A. Credit cards, of course, being accepted for credit cards, getting different interest rates. And then, of course, the lines of credit, being able to get personal loans, being denied for personal loans. Can you get business funding? So credit really impacts everywhere. And the more that credit evolves, the more it's getting involved with our lives.
It's about that also. One of the comments there in the bottom corner is that 20%, if you have 20% ownership, you're going to need to, most more than likely, that bank is going to require, like, that's unlimited personal. So we'll think sometimes sales tax, in the car or something like that. It's actually more important to realize that if you are even a minority partner, you got a friend or family, somebody that you know that, or you want to be the minority partner and try to limit your exposure, how much you might lose, it really isn't, doesn't work that way. Like Cassandra said, the bank has very little to work on. So what they do is they use your personal credit score, and they do that for a very, there's kind of an untrue kind of expectation. Well, when I start a company, I can file my LLC, get an EIN, and I can start building credit immediately. Well, that's true. You can. But think about how long it took you to build credit when you were 18 years old. right? Even when you were trying. Just because you can start does not mean they're gonna turn around and give you a $400,000 or $600,000 loan under that new LLC that you got in, without something else to back it up. So your personal credit is going to be the thing they're gonna look at. If you don't have that, or there's questions in that area, the chance of getting that loan, or even being part of think about it the opposite. Maybe you want to help somebody be a partner, and they have pretty good credit, and yours is so bad. You want to be a minority partner because it's a great opportunity for you. That business, even if the other person's credit is strong, your weaker credit could affect that business's ability, even if you're a minority partner. So it is very important because to recognize also that it's a personal guarantee. So, I regularly deal with clients and they think, well, it's a company. It's not supposed to be for me. The reason why I had a company, started a business, so they will not be a part of my personal credit. And it just will not happen initially. Now, eventually, if you have had success in business, you can release yourself from the personal guarantees. The lenders may do that. All that happens, but not immediately. It may be many, many years later before they'll release you from the personal guarantee that you had to have to start that business.
And you see videos like that on YouTube all the time. It drives me nuts. Or on Instagram, they're like, oh, you can get $100,000 or $200,000 in credit with your business if you create this EIN, and we don't have to do any of it with personal guarantee. That is baloney.
Yeah.
What they are doing is they're offering free credit restoration. They do a credit sweep, and then they go and apply for all these different credit cards. It's called credit card stacking. And then they rack up all these credit cards and they go and file bankruptcy underneath the bank or underneath the business, right? That's what they do. That's what they do. And it is not beneficial for the consumer.
Absolutely.
And it's not realistic either.
Yeah, it is not, you're not going to be able to start with that loan. Now, keep in mind, your lender may want you to file an LLC, so you have a fresh LLC that's responsible for the debt. All that may be true, but there is going to be either personal credit backing up, or if you have been in business a long time, maybe another business, cross entity, collateral guarantee. There is something there that they are using to get comfortable with you. Just wanted to add that to these. But it is important also to recognize all these things we know. You could get a credit card. Even a young person just run off of 18 years old. But is their credit limit what they may need? Is the credit or the monthly annual fees for that credit way up there? The interest rates? That's why the credit score overall and how you address your credit will improve your ability to get these. It is everywhere. Credit is everywhere. But good credit or useful and productive credit is what your goals should be. And that's what we're hoping to have you think about.
Okay, so on your credit report, a couple of things that we're going to look at. We're going to evaluate your personal information. This is so big, and this is a big red flag for if you have identity theft, we might find it here, right? I have a case right now where we're working on, and an individual, it was actually caught at the hospital. Whenever she went to the hospital, that somebody was using her social security. So she called me and she said, hey, Cassandra, I don't know what's going on. Pull up my credit report. So this lady is using her first name from the person who has the social security number and a different last name, but using the same social. She's using a different date of birth. So there's 2 different date of births on her credit report, and she's also using a different address. So personal information is a very easy way to spot identity theft that fast. Identity theft, you typically don't have fraud notifications or anything of that nature until you find the identity theft, right? So for the most part, this is the way we find identity theft. The other thing you'll see is collections, if you have any. Inquiries. So inquiries are whenever you go and you apply for something. You can see inquiries, and depending on what type of credit report you're looking at, you may see soft inquiries and you may see hard inquiries. But most of the credit reports, you only see hard inquiries, and we'll go over the 2. Then you can see your accounts and your trade lines. So that's going to be like your auto loans, your credit cards, home loans, different things of that nature. And then public records. So public records would be like your bankruptcies, if you have any bankruptcies. And then, of course, payment history kind of goes into your trade lines. You can go to the next. Okay. Oh, okay, sorry, it was lagging. Okay, review personal information, right? So we're looking for your full names and addresses. We want your names. We want one name, one date of birth, and one address. Address history. This is another way to spot identity theft, right? If there's a random address, like say you've only lived in Lubbock your whole life, and then all of a sudden there's one from Chicago. Well, that's a red flag. Employment history, they put your employer on your credit history. So if you're self-employed and you've gone and you tried to apply for a car and you put that you were self-employed on it, that's going to go on your credit report. And that's how this information gets on your credit report. From the applications that you fill out and whenever they submit them, boom, there it is. Your social security number typically isn't on a normal everyday credit report. Now, an in-depth credit report that a lender would pull, yes, absolutely, it's on there. But if you're looking at Credit Karma, or even if you pull up like Experian, Equifax, or TransUnion with their online portals, you will not see the social security number on there for privacy reasons. You can see your date of birth though. So biggest things, you want to protect all of this information with your life. A lot of people like to carry their social security cards in their wallet. Please do not. Please do not. My husband did power lines forever, so he would travel and he would get a job offer, and then boom, the next day he would have to go to a different job site, and he would always carry his social security card in his wallet. I'm like, stop doing that. Stop doing that. Also, don't put it on your phone. Please don't put it on your phone. Yes.
I worked with Social Security Administration for over 30 years.
Yes.
So thank you for bringing that up. I couldn't get my head in shape hard enough. People blame the Social Security Administration for giving out their Social Security number.
Mhm.
However, look at how many times you have to give out your Social Security number. You would be very leery about giving your Social Security number to people that really do not need it.
Yes.
My PSA to people when they would ask, should they take their Social Security card with them? If it's that important that you actually need the card, because most of the time they just ask you for the number, tell them you'll get it back to them at a later date. Keep it with the important papers that you have, insurance papers, wills, whatever, because it is that important. Because if someone gets hold of it, they can mess you up for a long time.
And it's not easy. If you have identity theft, you would think, oh, if I just prove this is an identity theft, it's going to be fixed. It is not. It is so complicated and it is so complex. You have to get so many different entities involved. You have to get the Fair Trade Commission involved. You have Social Security Administration involved. You have the police involved. You have the credit bureaus involved. It's a total nightmare. Dealing with one of those entities, and no offense, is very hard. Dealing with all of those entities at the same time for a client is very difficult. I've had one instance where we've had to get a new social security number for a person. But we had to stack up. The amount of evidence that we had for this person was insane. You cannot just go get a new social.
That was kind of my next
You
point.
can't. It's
Cannot
very
like-
hard.
Once you've been assigned a number, you cannot just go and get a new number.
Yes, it was very hard. We had to show the police report. This has been over a 12-year period of time where it's been a reoccurring issue where she gets it fixed, it happens again, it gets it fixed, it happens again. So I had to go back and collect all the evidence to get this corrected. So
I'll go back also, I mean, all of those started with her lap, Cassandra said that, absolutely. Because sometimes you think, well, what's an entity? That's some straight line, that's whatever, right? Well, I can tell you personally, because as Chelsea mentioned, that business, I was in my credit profile all the time. I was buying lots of it, and it was just happening, like it doesn't. And I come across this one, I was like, what is this address from Florida? I had Chuck Evans using my address, my zip code, I mean, my social, everything, living in Florida, and I saw it like almost immediately, and it still took me all kinds of work to get straight. Then get that straight, and it pops up at Chuck Edwards in Utah, doing the same thing. And the only way I knew it was because this address showed up on my school. There wasn't any accounts. They hadn't been able to do that yet because I was probably in it a little more often than they anticipated. And so I stopped it in that respect, but I still have to use PIN codes with the IRS because of the Chuck Evans in Utah. That's 20 years, right? So it is very important. What may seem like, well, so they got my name, my address wrong or something. It is maybe an indication of a lot bigger issue that you want to look at.
yes, and it can impact you for the rest of your life.
Yeah.
So I don't care if it's your cousin, I don't care if it's your brother, your mother, your aunt, your uncle, do not give them social. I have parents who open electricity bills in their kids' names because they can't open it in theirs. So that's hard. That is hard, right? Because whenever you're a kid, you really don't have control over it. But once you start getting to that 17, 18-year age range, always advise those individuals, hey, go ahead and start trying to figure out credit report. Just because of that specific occurrence, it happens way too many times. Okay, you can go to the next. So understanding credit reports. So 35% of your credit score goes to your payment history. That would be late payments, on time payments, late payments. If you end up with a late payment, it's going to drop your credit score. Sometimes it's 40 points, sometimes it's 70 points. Lately with student loans, it's looking like 130 to 115 points, right? You never know. Whenever that item is corrected or fixed, you do not get those same points back, okay? So if you dropped 115 points and I go in and I correct a student loan, you are not going to get all 115 back. You may get 30. It is crucial. You can work so many years to get positive payments, and one negative payment can destroy all of that. So put your bills on auto pay. Put your bills on auto pay. Make sure you have a reminder in your phone. Those kinds of things can be prevented, okay?
You can do 5 things the way you want. And because you got busy and went on a trip with buddies and forgot to pay you something on a Friday and it showed up late, you had just defeated or minimized all of the things you were trying to deposit. And you know, if you look at it, it's the largest proportion of the Fed, it has the largest proportion of the Fed, but it's even more than that. Like if you compare new credit, that you can open an account and doing all these things to help build your credit, right? In reality, then you miss one, you had one late payment, your score's lower than it was. What's that about? So,
And not just that, it always comes back on the adverse notifications, right? So even if you get your credit score back up and you still have that late payment on there, say you go to apply for a credit card, right? So your credit score was a 650, you missed a payment, it dropped it to 600. You got the late payment correct, or you didn't get it corrected. Say you go and you add kickoff to your credit report, right? To get your score up. Score is okay. It's important for a lender. But as far as it goes, the health of your credit report is the most important factor. So if you go and apply, and yes, you got your credit score up by using kickoff, Kovo, self, whatever, as a short-term builder option, that's just a Band-Aid. It's not going to help the underlying healing that needs to happen. So that's why it is so important to make sure that you handle the health of your report as well. And these in this circle are going to be the health. So your next one is going to be your amounts owed. This one, I would say not necessarily with your installment loans, but this really pertains to revolving credit, which are your credit cards. Revolving credit is almost just as important as your late payments. I can fix somebody's credit report and have it squeaky clean, and all that they have is high utilization, and their score could be the same, if not lower, if they do not handle their credit card debt. So I always recommend keep your credit cards between 1% and 3% of your utilization, and we'll get into that later. Your length of your history. Length of history is your average age history. So it adds up all of the years and then it divides it, right? It's a whole different equation. So for me, I am 32 years old. I got my first credit card in 2013. I've had it ever since then, right? Told you about my case card. So I still have it up to this day. My average age history is 7.5 years, and that is fair. It's not good. It's not great. 7 years is fair. I'm like, you're telling me I've been building credit for 13 years and I'm still just like, fair? So you have to make sure whenever you're opening accounts, closing accounts, you do that strategically so that average age history would be as large or as old as possible. So that's typically why you see individuals who have had credit cards for 40, 50 years and they're in their 70s and 80s. They have some of the best credit scores because of this situation. They've been building it for so long. The other thing is those are kids and elderly are the most abused types of credit, the ones that you see the most identity theft on, because they're the easiest to access. New credit is really easy to get a hold of and use. Super old credit that has a lot of history with a lot of good payments on it and a lot of good credit limits on it, those are also easy to take advantage of.
They're less likely to, even though there's an issue.
Yes.
They kind of lie, you know, in the background, doing what they want to.
Yes, exactly. And then as far as it goes for your credit mix, that would be what types of credit you have, right? So we're talking auto loans, that would be installment, revolving credit. Typically, whenever you're applying for a mortgage, they want to see you have different types of credit to make sure that you're responsible. And credit cards with revolving credit are the most abused type of credit. And then new credit. Don't apply for stuff all the time. Like whenever you go and you open 17 new accounts in 1 year, that's going to drop your credit score. So make sure, limit how many times you open accounts. Okay, you can go to the.
It's a football game, you gotta stand there, they're giving away free laptop bags, if you want one. Here's a, fill this little paper out. And now your credit score may drop about 50 points for that free laptop.
What did I use the last time? Victoria's Secret underwear, right? I don't care if you go to Pink and they offer you a free set of underwear. Do not get that credit card. Do not get that credit card. Tell them no, okay? Their interest rate is 32.99%. The free underwear is not worth it. Tell them no. So yeah, so your good credit is your good reputation. It is hard to earn. It is so hard to earn, right? 13 years I've been working on my credit and I'm bare. Like, that makes me so mad every time I look at my credit report.
I like to think about it as fixing your credit or fixing credit is like a diet. I mean, hey, you look at, I don't drink chicken enchiladas, right? So I work and I get my work on this diet, I get some pounds off on the weekend, and I go. And so the credit can kind of do all the things you're trying to do, but man, you want to stay on top because one mistake and your score drops, and like, oh man, I'm doing all these things. So just.
And it's easy, it is so easy to lose, right? That one late payment can destroy years of work, years of work. And late payments, they're not just easy to fix. There's so much verification and validation behind that late payment. Like, how do you say you didn't make a payment, right? You can make a payment and they'll still fight you saying that you didn't make a payment. So late payments, 100%, or any really kind of collection, it depends on the collections, but charge-offs, it's so easy to lose. It's easy to not make those payments, but it's really hard to get it back.
And remember, it's over a third of what you calculate your score. So.
Yes,
Now,
yes.
it's been a while. I'm in a situation where you had to explain once you're in front of the lender. And it depends on how generous the lender is, because they don't have to. They will go through your credit score with you and say, can you explain, especially if it's an anomaly.
Yes.
So they're saying, okay, see that you have one or two missed payments. Is there some reason why, or late payments, or what was going on? Can you explain?
Yes.
If you can give a justifiable answer, sometimes they will take that into consideration.
Yes.
Or give you some time.
Right, and for like a personal loan situation,
Right.
and if you have a good relationship with that bank, I cannot push how important it is to find a bank and grow with them.
Yes.
Grow, because they have their internal ratings as well, right?
Mhm.
And they look at how you have done inside of their bank as well. They do keep that into a factor. However, there are some that are outside of their control, like a mortgage, right? They have federal guidelines that they have to go off of. One of the biggest things that I see is when people get divorced, okay? And the auto loans or the home loans get late payments, and the other couple does it either intentionally or unintentionally, you never really know. But in that kind of case, it is still a mortgage late payment. And they will not give you another mortgage until you do not have late payments for a year. There is not a way to get around that. There's not. Even if the court ordered that that person was supposed to refinance that home into their own name, that is still one that we can't send that decree to the credit bureaus to get that mortgage off your credit. It doesn't work that way. So that's another thing. Do not co-sign for anyone. Do not co-sign for your cars, for like your kids' vehicles, right? Help them build their credit so they can get their own vehicle. Help them build their credit so they can get their own apartment. I see that all the time for grandparents and parents. Do not co-sign for your friends, your girlfriend, your boyfriend. I don't care. That goes back to your social security number is your number. Protect it with your life. Your credit report is yours. Protect it with your life because their mistakes should not prevent your hard work. Okay, speaking of times.
One question.
Yes.
Late payment.
Yeah.
Is late payment like if it's due on the first and it gets stuck in the mail somewhere and you get it, they get it on the fifth. So they call you and you say, it's in the mail, it's coming, and they say, well, we're gonna make a note of that. Is that a late payment?
No, so it would be a late payment for your credit card on their side, so they would charge a late fee, right? But it has to go 30 days or over for it to be a late payment on your credit report. So, yeah.
In our small business, because of when our room and board checks hit the bank compared to when I pay the bill.
Mhm.
And so sometimes there's an
Yes.
overlap of like
Yeah.
4 or 5 days.
Now for business credit, right, this is a different story. Business credit does not care if you're a day over, right? They don't care. Business credit on that side, if you're doing a 30-day, right, or a 60-day net, you go 31 days. And that's a different story on the business credit side of things, right? But for personal credit, if you pay 29, like on day 29, and it processes on day 29, you're safe. Of course, I don't want you to get that close because that's when accidents happen.
Right.
But for the majority of the part, if you had a payment due on the 1st and you pay on the 5th, you should be in the clear.
Okay.
Yes.
Yeah, you never let it go over 30 days because that had
Mhm.
happened. And then every once in a while, like somebody like Optima, Excel, will put the $10 late fee.
Yes.
And then I call up and I'm like, okay, it was already in the mail. I talked to blah, blah, blah. And they'll
Yes.
say, well, we will take that off.
Yes,
And so
yeah.
they take it off. So that's not.
And credit cards will do the same, right? They typically give you one late fee waiver per year. Auto loans typically have a 15-day grace period depending on the loan or depending on the bank. I know certain credit unions during Christmas time, they'll even give you a deferment on a payment, right? So those kinds of things typically should not report to your credit report. Yes, so we can get more into that too, though.
It's used to call ahead of time, permit for Christmas or whatever,
Mhm.
right? That's not after the fact.
Don't call on day 29 saying you need a deferment because you are going to end up late and they don't care. Like they don't care.
Cassandra said something a minute ago, and it just kind of went by quickly. I want to take a second, make sure we revisit. And that is make sure your auto payments are set up. That's one of those things where a lot of people don't want to mess with that, right? And you might have a card, or maybe it's the card you use for all your fuel and your groceries and everything else. You pay it $800 or $900 a month, right? So you pay it all the time. So utilization is not an issue. It's just a more convenient way to do it, right? But if the thing is due on the 18th, then you set up the automatic payment to do the $30 minimum or whatever, so that everything stays on schedule. And then if you've got to wait for your paycheck for another couple of days or whatever, you can pay more. You know, I think now online, you pay 2 times a month, 3 times a month. And that way you're not missing, you're not taking a chance and you somehow get off track and that automatic payment doesn't happen. And what I'm gonna do is I'm gonna just pay him more. I'll wait, just pay him more on Friday. And then the kid ends up sick, and then you end up with the car broken down or whatever, and you forget to do it, and you look up and now you missed it.
And like you're saying, even like how the payments, like, and trust me, I understand being business rich and being business broke waiting on the invoices, okay? I understand that. If that is the situation, and even for your personal finances, still having, like, you should have a general idea, especially if you've been working with someone long enough, when their payments are gonna come, right? So I know my commission check from one of my partners is gonna come about the 14th of the month. I know that. Even though, like you said, like my internet may be due on the 7th. Okay, well, I'm gonna schedule it for the 14th because I know that deposit's coming in. So even having that automatic payment, so you just know, no, it's not on your due date, but it's also not on day 29. So that way you still have that reassurance that something is scheduled just in case you forget. Because even me,
And even if it's not the full amount, it's still.
even the minimum due, even the minimum due.
Yeah.
I don't care if it's the
I
full
don't know
amount.
if you know you do, but that would
Yeah.
always keep me out.
Yes, it'll at least prevent a late payment, at least prevent, because utilization can always be recovered.
Yeah, there you go. That's
I mean, that's a super easy fix. All you gotta do is pay it, right? And it's 30, 45 days later, then it's going to rescore, right? Your score is gonna come up. Late payments, it's not that way. A late payment's on there. So I would rather you get a high utilization and that minimum due paid than you get a late payment. Yes,
Yeah, you have a little dip that 1 month.
yes,
Because of whatever reason, that you will not have a problem that sticks with you.
yes,
So
yes.
I feel like if I did everything out of the. Giving companies control over my finances instead of me having.
Not necessarily. You really have to think of it. Yeah, no, in some places I don't trust on auto pay. I do not trust my internet. I'm not gonna say the name, but I do not trust my internet company. I don't. They have had so many billing errors since they've switched ownership. I do not trust them. But guess what I do have? I have a reminder in my phone that my bill is due this date. And that way I get notification a day early. I have it set up a day early. So it reminds me and it reminds me and it reminds me and it reminds me. So that way I can't just swipe that notification away.
Okay.
So that way I can make sure that it's paid. Yeah, I don't trust my internet
Another
company.
thing, but that, mine, that's why I'll use a card. I use a card and pay with cards when you can, right? And then if there's something that pops up on the card, I don't like, I can argue about it, but the payment's still gonna be made by when they want it, and then I can address it, and I have a little more control over maybe a dispute or some sort.
And credit cards are
But then
typically,
you go take a big chunk of money out of my account, what are you doing?
right.
Now, I wasn't expecting.
Yeah, and credit cards are easier to dispute.
Okay.
Yes, like any transaction. And that, I mean, for us, the majority of our personal bills are all on credit cards because my daughter is in cheer and it is very, very expensive. So any kind of points I can get for travel, because we are pretty much gone every single weekend from December until May. So for that, I make good money. I don't make that kind of money. So I have to use my points in order to make sure that I can recover and pay for that kind of stuff. And it's not necessary. And if I can get free points off of money that I'm already spending, why not do it? So yes, so that's one of those things. But credit card transactions are always easier to dispute than what it is with your bank. Always. Okay, so as far as soft inquiries and hard inquiries, soft inquiries are going to be new cell phone accounts, right? Auto insurance. Even sometimes whenever you get health insurance now, for like life insurance, they're checking this. Jobs, that's a soft inquiry. Your hard inquiries are going to be your loans, credit cards. Now, whenever you're looking at a credit card or a personal loan, sometimes they offer a soft pull, or it'll say underneath, like, this does not impact your credit score. That is a soft inquiry. That is not a hard inquiry. Soft inquiries do not hurt your credit report. You can see your soft inquiries typically on the annualcreditreport.com. Credit Karma, places like that, they typically don't have your soft inquiries. They only show your hard inquiries. So the hard inquiries are the ones that hurt your credit report. So whenever I was telling you don't get new credit on a regular basis, that's why. Credit inquiries can drop your credit score. So if you go to purchase a car, even though they say one inquiry hurts your credit that one time, doesn't matter how many times you run it in the 30 days, I call below me on that. I've looked at way too many credit reports and I don't care what they say about that. That's not true. If you go and apply for a car and they run your credit 17 times, it is going to drastically decrease your score more than if you applied once. Now, it's not supposed to, but I see that's a myth and it needs to be broken because I see it happen way too.
Yeah, so here's the thing they say. Oh, no, we got this great network, we got all these people that have money through our network. So you just do it once with us and all these people will have access to it. So we're getting essentially 12 inquiries with this one. So that's why it's good.
Yes.
But that isn't really what happens. And instead, that company that they can go do it like themselves. Just because they don't, they mean, sometimes they do and sometimes they don't, maybe they do, only if they're kind of unsure, doesn't matter. They all now have access and so them with all those hits. Whenever the person that you talked to initially told you, hey, we got you covered, it's only one inquiry, and we'll give you the best deal possible. Well, what's really happening is whatever their network, whatever it consists of, whatever companies consist of, they probably were doing their own internal investigations.
And in reality, if you have good enough credit, you should be going to your credit union or your local bank to get your auto loan. You should not be going to your dealership.
Yeah.
Are you with Citibank? I seen your pen. Okay, so yes, right? Yes. And you write a check for them and they go to the dealership with the dealership's name on it and they sign it and you walk away with your car and a great interest rate while you're at it. And one inquiry. Okay?
So.
You did it, being yourself.
Yeah.
Amazing.
Okay, great, but
Yeah,
I
like,
mean, you did a whole
so-
extra piece you could add, that's totally fine.
Yes, so 100%, if you have good credit, you shouldn't be dealing with 17 inquiries from the dealership. You should not be sitting there for 4 hours waiting for them to give you a 20% interest rate. You should be at your local bank, walk in and walk out with a check and with a really great interest rate and not have to be there for 4 hours. So 100%, and I've had this happen to me, where I've gone to a dealership because I wanted to use that specific brand or that specific company's financing. So for example, Ford was having, it was like 2% on an Expedition in 2024. I'm like, man, that's really good for right now. The car market was really crazy. The interest rates were pretty much high everywhere we looked. I'm like, I know I have the credit to get approved by Ford. So I called the dealership. I told them, hey, I want this vehicle and I want my application with Ford only. They ran it 32 times and I was so mad. It dropped my credit over 80 points. I have not gone back to that dealership, to say the least. We used to have a partnership. We don't anymore. But those kinds of things, right? So like, I don't care if they say you can run your credit for that auto loan as many times as you need to within 30 days and it won't impact your credit score. Just go to your local bank.
So how can you get a credit score just random, like you're not necessarily, if I want one right now,
Mhm.
because I'm gonna go see my financial planner next,
Mhm.
where would I go to get that and it be safe?
So I use Smart Credit for my business, just because that's our credit monitoring that I've grown to trust. There's places like Identity IQ. Sometimes if you have other credit cards, you can look on their apps and they have credit scores for you. But you have to be careful because there's so many different scoring models out there. There's like over 62 different scoring models. So you may see that you have like Credit Karma, for example. On Credit Karma, those specific credit scores are not accurate. A lot of their data isn't even accurate. It still says I own a 2017 Impala and I haven't owned it in years. So with that, I use Smart Credit for my clients. However, my myfico.com is another really, really good one. Myfico.com. That is going to be the most accurate score representation out there. However, you have to pay for your scores. So like, that's one thing I want you to know is credit reports are not free. And the ones that are free, they're typically making their money in other forms or fashion. So Credit Karma is free, right? Because if you pull up Credit Karma, they're like, hey, this credit card looks great for you. This credit card looks great for you. And you click on that link and you go and apply and they get $200 per person that gets approved. Okay. Well, of course, they're going to give you a credit report for free. They are actually in a massive lawsuit right now with the government because of this. They are essentially putting people at risk and it's causing issues with credit reports because they're saying you're pretty much approved. You go and apply thinking you're approved and then you get declined and it drops your score. But in reality, they were all doing it because they're getting commission on the backside. So they make millions off of their commission links. Millions, yes.
I think you had just in passing mentioned the annual.
Yes, so on that sheet that I gave y'all, there is one QR code that's for Smart Credit, which is what I use. And that specifically, I put that there because if you are needing me to look at your credit report, I can use that link. If you register with it, I can see it on my side, right? Without a password, without a username, your social security number is not on there, so that is protected. The annualcreditreport.com, that is something that is a government act, okay, that has been provided, and you can only access your credit report on there once a year. So it does not have any scores. It only has the data. So whenever we're talking, this is kind of going on topic. So whenever we're talking credit reports, but I think it might be necessary. There are the credit bureaus. We have Experian, Equifax, and TransUnion. These are called data furnishers. They collect the data from your banks, from your credit card companies, from your rent reporting. They collect all the data. Then we have FICO, which is a different entity, and we have Vantage, which is a different entity. All 5 of these individuals are separate for-profit companies, okay? So we know nonprofit versus for-profit, right? Everybody's familiar with that? These are for-profit entities, and they are for their bank and not for you, okay? They are for their pocket only. FICO and Vantage purchase the data from Experian, TransUnion, and Equifax and create your credit scores. Okay, so they don't have your data, they don't hold your data, they collect it from a different entity and come down. So you see how this is making a lot of money? A lot of money. Now you have your FICO and your Vantage, and then you have your local banks, and you have your credit card companies, and they have to pay to access all 5 of these. Credit reports and credit scores are not free to access. Some of my lenders pay $75 per credit report for mortgages. It can be extremely expensive for even an application, and that's something you don't think about. Like, it's not known really, and it's not put out there. And it gets so much more. This is a billion-dollar industry, multi-billion at this point. But it breaks it down even more so, and I want you to realize this. Yes, it is very important for your life. I used to freak out about my credit score if it would change 5 points. But the main headquarters for Experian is in Dublin, Ireland. And I'll leave it there. You can do what you want with it, but it's not even a United States company that is furnishing your data, okay? So whenever, yes, it matters. It matters so much. But also remember, this is for banks to see your risk. So at the end of the day, if you have a bad credit score, you're not a bad person. It's a business thing. It is a business thing.
And I mean, even if you have a decent credit score, that doesn't mean you're automatically going to get the credit you want from the bank. And so I've had some pretty solid, people with great history, and then they've got a business that is maybe there's some question marks around it. It doesn't mean the bank's going to, well, your score's 780. This is great. There's too many things that go into that calculation for it to be as automatic as that.
Yes. That's why I always say the health of the report is so much more important than your score. Yes. Okay, we can go to that next. So your types of credit, we've already kind of discussed this. You have your revolving credit, that's your credit cards. Your installment loans would be your student loans, your personal loans, your auto loans. Then you have your mortgages. So some rent reporting will also show up as a mortgage. This is great if you're trying to buy a home. It shows that you can handle that payment responsibly. And a lot of my lenders love whenever they get to see positive rent history. Most of the time, because one, it doesn't show that you'll go into like a payment shock situation and that you can handle this responsibly. Now, buy now, pay laters. These are going to be your Afterpay, Affirm, Klarna, Sezzle, Chase now even has Afterpay. There's so many different ones. So if they're offering to break up your payment into 4 payments, or if you go to the cash register, it's almost at all retail stores now, you'll see a little pink square next to the cashier, and it'll show like their QR code for you to go. And you can instantly apply and get approved for a digital wallet, right? And it'll go into your phone and you can tap it. And it will deduct a payment every other week out of your checking account. Sometimes it's weekly, depending on the situation. A year ago, these were not on your credit report. They are now. So let's think about that history, right? With that, the age of your history and your age of your credit report. And we said we don't want you to have a bunch of new credit. So what I see is people go and use buy now, pay laters, and it's like a $75 transaction, a $140 transaction. Well, you pay it off in 4 weeks. You're using that several times a month, every single month. Think about how many times there are accounts opening and closing on a credit report. So they advertise inside of their apps and on their websites, and this is going to help you build your credit score. Well, that's a lie. Instead, what it's doing is it's decreasing your average age history every single time you use one. Before it was added to a credit report, one, you only had to worry about your budget, right? It's really easy to go spend that $75 here, the $140 here. But next thing you know, you have a $50 payment coming out this week, another $25 coming out 2 days from now, another $75, and you're over budget. And then you know what happens? You miss your payments. So buy now, pay laters are not my friend. Please do not use them. If you don't have the money, do not swipe with a buy now, pay later. Yes. That goes into budgeting and credit scores. It will decrease your credit score. For
The
sure.
lady is gonna make it so easy. One of my daughters, I know the age where she's trying to build credit. She thinks, it says right here, build my credit. I tell her, build your credit. Going and doing something like that was not really what I wanted her to do. You know, to help her build her credit, but it's just.
And it makes it, like you said, it makes it so easy. People with terrible credit can get buy now, pay later. And I mean terrible credit. But the other thing is it also has disqualified people from getting a home because it changes their credit score and it adds to their debt to income ratio. And whenever they're thinking, oh, no big deal, it's just a purchase from Academy for $200. Well, $200 could put you over the threshold and you can't get a home anymore. So those are the kinds of things with buy now, pay later. They used to not be on credit reports. So a lender would have to go through your bank transactions to figure out where that extra debt was and what this transaction was. And of course, it is a debt, so it is calculated for debt to income ratio purposes. But the way that it is hurting credit reports is unbelievable, unbelievable. Even if you have a 700. I've had a client come to me and he was like, hey, Cassandra, I noticed my credit score dropped like 100 points and I can't figure out why. The only thing he had on his credit report that seemed to be an issue was buy now, pay later. No late payments, no utilization. He had great credit. I'm talking, he had some credit cards with like $12,000 and $15,000 limits. And the only thing that was there was buy now, pay later. PayPal has it, Chase has it at checkouts now online. So be extremely careful with this.
So I've been using it just recently because it's just convenient. It's not even that it's, the money's not there.
Yeah,
Should you just cancel it now? I mean.
I would pay them and get it off.
Just
Yeah.
use it.
And not just that, as a lender's perspective, if they see this on your credit report and they don't know you, think like they've never talked to you, they don't know you as an individual, and they see that you're using buy now, pay later, what do you think that they're thinking in their mind? You can't afford it. And if they see any kind of those risk signs, that could be a point or a reason for them not to lend to you. Yes. Yeah.
Now, are you talking about, maybe I'm missing something, are you talking about like, medical? And the medical says you owe this amount?
That's a collection.
Okay.
Yeah, those are collections. This is specifically like, a lot of them are apps on your phone now. And one thing with medical, how many people know of Care Credit? Yes, have you heard of it? Have you used it? Care Credit, I understand some people need to use Care Credit because of an emergency or whatever. Please keep in mind, it is a credit card at the end of the day. So I have people going and getting a BBL with a Care Credit card, maxing out $12,000, and they're like, oh, I'll just pay it over a year. Well, that's going to kill your credit in the meantime because it is utilization factor. So that goes to that 30%. So be careful on using things like that. Even Cherry. So if you go to get your lips done, they'll say, hey, you want to use Cherry for a payment? Please don't use Cherry either. That goes into the buy now, pay later.
So maybe you can answer this one, because I haven't, if you're buying a printer, Amazon says, you need 3 easy payments. It's
Yes,
this is-
that is it.
That's what I mean. You know?
And it's becoming so, yeah, so Amazon has PayPal and Chase is an option now. And whenever you go to checkout, it'll say PayPal Pay in 4, right? That is what it's talking about. Depending on your credit report and your credit score, you may get it for 0% interest, but a lot of the times there is interest added. So a lot of people think, hey, it's 0 interest and I get to make it in 4 payments. Yeah.
Like my friend.
Mhm.
Blue Pattern,
Mhm.
but I make payments on.
It depends on how you did the transaction. If you, where'd you buy it from? You bought it from them? Okay, typically that's gonna be more like a net situation, right? And more of an invoice type of situation and not this. This is like whenever, and some of the places have it like Canva, if you're doing like prints for your business and you're trying to print off like pamphlets and business cards and things of that nature. Most of it is online. Most of it is online. And it will pull up as, it'll show it at checkout. Even Southwest has it now, right? And it'll say Flex Pay.
Yes.
Yes, that is buy now, pay later. And some of them are for longer periods of terms. So say you have an Affirm account that's like a year long or 2 years long, and you're doing a purchase for like $4,000. That's a little bit different, right? Because that's going to be an extended period of time. But if you're trying to use it for $75 purchases and $150 purchases, that's when the impact is coming from. But those longer period of terms, you don't see as much happen with it.
Okay.
And you can get 0 interest. So in that case, like if you're trying to buy a printer and they offer a firm, right? And it's like, okay, we can pay this $5,000 printer off in a year and we'll give it to you for no interest. Well, that might be a good business decision if you really need that printer and you don't have all those funds, or say you have the funds, but you could allocate those funds elsewhere. It might be okay, but it's going to go on your personal credit and that gets a little bit sticky with your taxes and all that. So, yes. Okay, we can go to the next. Okay, so negative accounts. This is going to be your late payments, collections, charge-offs, repossessions, and foreclosures. So like the medical debt that you're talking about, typically those come in as a collection. Charge-offs are typically when you stop paying a credit card. Sometimes repossessions can come in as a charge-off. Most of the time they come in as a collection on the credit report. The difference is a charge-off is whenever an entity loses the money and you haven't paid it back and they do a write-off on their taxes. A collection is where you haven't paid the money and it's a loss and they sell that debt to a collection agency.
Okay. Just a recent visit, and they wrote to me and said, you owe this money. You can pay this, you can pay it now,
Yes,
or you can pay it off in 6 months.
yes, no, that's completely different.
Okay.
So as long as you pay the payments
Yes.
in that specific time, they won't send it to the collection
Okay.
agency and they won't,
Okay.
but here's the thing,
Uh-oh.
okay?
I thought it was too good.
Here's the thing. And this, I got some bad comments on a situation on Facebook with this, but somebody on Bits of Life, it's a page on Facebook, and they commented on it and they were like, hey, I have these medical collections and I'm not for sure what to do with them. I've had this happen to me too. And so I always tell everybody, if you have medical debt and they're contacting you to make a payment, they want you to pay in full, right?
Mhm.
Or break it up in payments to equal that full amount. You can get a discount. And so for a lot of the realtors that I work with, they're all self-employed, so they don't have health insurance. So they can get some astronomical amount of bills. Now, please know this is not legal advice, but this is just a way for you to save money. If they are going to send it to collections, let them. As soon as you get that first collection notice, handle it. Don't ignore it. Handle it. But you can get 50 and 60% discounts on that. and not pay it in full. So for example, I had emergency surgery in April of 2025. I had my gallbladder removed. And my husband, he had left his job. It was on March the 30th. I had emergency surgery on March the 31st. So he was moving jobs from contracting out of town to work at LPNO. And traditionally, whenever he had worked at this company before, because contractors, they move from companies back and forth all the time, right? It's weird. It's a blue collar thing, right? So he had moved jobs. Before, when he worked for the company, he had insurance for 30 days after his date of last employment. He had left his 2 weeks, like it was all professional, right? So I go into the hospital, they're like, you need emergency surgery, you have a stone stuck, this has to come out. It's not like I had an option, right? Well, our insurance ran active. They said, hey, pay this $200 or copay, right? So I pay it, whatever, we do the whole surgery, blah, blah, blah. I was in the hospital for 4 days. I get out, everything's fine. 2 months later, I get a notification that, hey, your insurance was backdated and you didn't have insurance during this emergency surgery. Boom, I had a $97,000 bill show up. $97,000. I just got my debt paid off. Like, the only debt I have now is my student loans and my home loan. So I was extremely mad, right? Extremely mad because here I have been working so hard on my debt and it showed up. So I contact Texas Tech and I contact UMC and they were like, we'll give you a cash discount. Okay, my cash discount brought it down to $20,000. $20,000 is a lot of money. So I was like, you know what? This is not right. I work with collections every single day, literally. So I let it go to collections. Guess how much I paid? $4,000. From $97,000 to $4,000. The hospital, that's their job to get as much money out of you as possible. They're not going to go lower. The collection agency, when they sell that to the collection agency, then at that point, that collection agency has bought it for pennies on the dollar. So you have room to negotiate with a collection agency where you don't have room to negotiate with the hospital. So.
Does that stay on your credit report?
No, so I handled it as soon as I got that first notification. So they're supposed to wait a year with medical debt until you, so a year from your first notification that you received, they can't add it to your credit report. That was whenever Biden put all the new regulations out, right? So if you catch it in that year, as long as you handle it, get a payment plan set up, it won't even hit your credit. Yes, there will never be a fine. The other thing is if a collection ever goes to your credit report, most of them can be done in a pay for delete fashion. A charge-off cannot be done in a pay for delete fashion. Charge-offs will stay on your credit report even if you pay them in full. Certain banks will give an exception. But if you're talking Chase, Bank of America, Capital One, they'll update it to 0. And it will not help the credit score increase. So collections, always, always, always negotiate.
I went on a chart of us, although she mentioned there's a tax consequence. If that company, I don't care if it's Bank of America or whatever, they do a charge off, they can file paperwork and show that as a charge off on their end, but then you have to show it as income on yours, the amount that they charged off. So you can affect your income tax amount.
Yes, you get a
And not even-
299 fee.
Yeah. C shows up and now it's part of your tax at the end of the year. And it's, the way that works is, you owe the tax on that because they're looking at it as, well, I gave you income. And say, I essentially did something that now improved your household income level to X amount of dollars. If you get it paid, that means you have money. So that can really hurt you if you're not, you think everything's kind of hiding in the background somewhere, but in reality, it's going to come back out when the 1099 seat shows up in the ground.
Yes. And so with charge-offs, I always tell people, I had somebody come to me, not yesterday, but the day before. They had paid $17,000 in their charge-offs and their credit score didn't increase. They went to go try to get a mortgage and this loan officer had a simulator that said, hey, if you pay this account, this account, this account, this account, it was going to increase their credit score and they could buy a home. Well, now they're out of $17,000 and their credit score didn't go up. So you have to be extremely, extremely careful whenever you're paying charge-offs. yes, it's better for you to pay them than it have a balance, 100%. However, I typically like to try to dispute those and get them off before you pay than after you pay, because it's extremely hard to get them off after. It's easier to get them off before you pay. And foreclosures, of course, that's whenever you don't pay for your home. So you can see short sales or foreclosures on your credit report, and then repossessions, whether it's voluntary or involuntary. So if you call the bank and say, hey, come pick up my car, I don't want it anymore. Or if they catch you at Walmart and jack your car from you because you haven't paid, it doesn't matter. They hurt your credit the exact same way. Okay, we can go to this. So late payments, if they're accurate, yes, this is where I said this is very hard to find, right? Is it possible to get them removed? Yes, it is. Typically, we want them to be a closed account because it's easier to get a closed account removed with late payments than it is an open account. If we get an open account removed with late payments, it will come back on your credit report. So it needs to be closed. If it's closed, it won't report again. If it's inaccurate, then at that point, we need your statements, right? We need your bank statement, we need your credit card statement, we need your emails in order to help dispute this. You can also do this on your own. And we'll get into that here in a little bit too, like on the steps on your dispute process and how you should do that. You have to do it the exact same way, no matter if you're right or wrong. And then of course you can ask for a goodwill removal. If you have one late payment, wait a year, okay, from your date of your last late payment. So say I missed on August the 7th of 2025. On August the 8th of 2026, I'm going to be calling that company and asking them and telling them, hey, I've not missed any payments for a year. Will you please remove this? I would say 8 times out of 10, they're going to remove it, especially if you've been a valuable customer and you've been with them for a really long time. It never hurts to ask, just like the late fee waivers. Never hurts to ask. So always ask for a goodwill removal. Then if a goodwill removal doesn't work, then you go into the dispute process. So collections, we kind of spoke on that a little bit. Collections are typically going to be credit cards, medical debt. Sometimes they send repossessions to collections. It's very rare, but it does happen. Typically, they keep those in-house as a charge-off instead. There's a lot of documentation that goes into a repossession. So a lot of the times it's very hard to sell those. You have to do it correctly in order for the creditor to sell it off to the collection agency, so that way they have their documentation to put it on a creditor. Okay, we can go to the next. Y'all have questions on collections? Collections are one of those. If you ever have any negative items, the most important part is looking at your date of last activity. So for charge-offs, for collections, for repossessions, the date of last activity is going to be on your credit report, and collection agencies like to re-age it. So that's why sometimes you see a collection pop up that's 12 years old, and you're like, this can't be on my credit report. This is from whenever I was 20, right? No, it can be on your credit report if they re-age it. However, they do that because it's illegal to have it re-aged. So they make it look like if they added it with the original date of activity or last activity, right? And they put it on your credit report, at that point, it would become illegal. So they re-age it so you can't catch it, right? So the credit bureaus can't see it. That's how they get it on there. So I have a lot of instances with Sprint. Sprint hasn't even been open for like 7 years right now. They try to they send all of their collections to a specific collection agency, and the collection agency is re-aging the dates of last activity to make it look like it was done in 2025 when it really wasn't. I've had so many of those cases, and it's illegal. They can't do that. They cannot change the date of last activity in order to be able to put it on a credit report. Dates of last activity matter in all negative items because it determines your statute of limitations for how long you can be sued, and it determines on how long it can be on your credit report. So you always want to double check. And who knows how long an item can be on your credit report? A negative item. Yes, 7. How long can a bankruptcy be on your credit report? So we have chapter 7, and we have chapter 13. They have two different times. So a chapter 7 is where they completely wipe your debt, right? That's 10 years on your credit report. A chapter 13 is 7 years on your credit report. So these dates are extremely important because I always have people call me and they're like, man, that debt was really old. And I'm like, okay, you opened the credit card in 2020, but you stopped paying the credit card in 2025. So at that point, from 2025 to 2026, that's only been a year since the date of last delinquency. So it doesn't go off of the original opening date, it goes off of the date of last delinquency. Okay, we can go to the next. Okay, building positive credit. Do you want to talk a little bit about
Yeah,
it?
we talked a lot about the negative stuff. So let's talk about some positive points. So there are specific things that you should keep in mind. If you are like my daughter who's trying to get her started and that type of thing, there are different ways personally and as a business you can build, right? So we have, the entry level cards are not a problem, right? They have them, you get something, even if it's a long time ago, small balance. You might be have to understand you have to pay a higher, annual number for that or something, or not only be $300 or $400 or $500, but if you need to start somewhere, you can start there, right?
I recommend being careful.
Okay.
Be careful with those. Because always try a pre-approval with one of those good banks, right?
Yeah.
Do a soft inquiry like Discover, Capital One. Sometimes Bank of America, if you bank with them, will do a soft inquiry. Chase is the same too. If you bank with them, they'll do a soft inquiry versus a hard. Try those.
They're not all created equal, right?
No.
So you want to really pay attention to what it looks like and where, how you're gonna maybe graduate out of that, right? And so, often you'll have a case where maybe someone puts up a deposit to start and a card, and after a period of time, you have money back. You just want to understand exactly what you're getting. There are some decent options, and you gotta, when you're 18, ever start somewhere, at least you're starting with a strategic thought in mind, not just because your friend said, hey, get this card because it'll be great, right?
Don't be like me and have a case card as your oldest card, because if they go bankrupt, I'm gonna have a problem. I'm gonna have a problem.
And I'm gonna also say the part that I feel like is very, whether it's personally or definitely within a business, we mentioned earlier, grow with that bank, right, that you started with. That is a big difference. Like my son, whenever he bought his first car, he actually saved up the money and almost all of it. He could have done without it. I said, no, it's gonna get you a loan under your name, not mine. And my daughter was like, I want the terms that they'll give you, not me, because she was paying higher interest and whatever. No, that's not what we're doing. We're thinking, just call, I'll take you down the road. Well, he went and got a loan, paid off the car, did it 12 months or something, and he just made it automatic. And then the next time he did the same thing. Well, now he can go with whatever, he has options. And he did that at, 18, 19, 20 years old. So a credit building loan, or maybe a credit union or a bank that you have some experience with, even if they don't give you the whole thing, they're not gonna let you get the Dodge, Sprinter, whatever. You're gonna get something, work with them, whatever they have had, it's a beginning point. But more importantly, you gotta treat it like it is your beginning point. If you want it to be something, easier for you later, you want that expedition or something, you just can walk in and make it happen without. So I would say those two things are important when you're building personal credit. And really, it is a similar type of answer in the business side. So you start out with some trade, you've got another slide here in a little bit, but the small local trade, vendors and accounts where you set it up and you pay. That's your new business. You got to start where you got to start. Doesn't matter sometimes whether it's financially the most absolute perfect option. You might save a little money if you buy it from somebody who has a supplier, wholesaler in another state, but you've got to build local credit. You got to build that relationship with the bank, because when you call the bank, call you guys on a Thursday, because if something needs to happen, they're not, that conversation needed to have started months or years before for that to maybe get the you need. Right. I would say also the other piece that I believe you guys are not a little surprised about is the use of an authorized user. Okay. So this is a fantastic. Yeah, I mean, it didn't exist. I think you can add users, you can add them to your account. But like, for instance, my daughter, I'm bringing her up, I can add her to one of our cards that's older, doesn't have any on it, it's only on there for some travel or something like that, she can get a boost on her own personal score by being an authorized user in our account, because that account will show up with her as well. Now,
And with an authorized user, you do not have to give them the card, okay?
yeah.
Now, the biggest thing is, there are certain companies that you can set up a card for your kid and give them a limit based off of that credit card, right? So like Amex is pretty good about that, X1's pretty good about it. But with that, right, it'll also notify you like, hey, like my kid's Ryan, right? Ryan made a purchase at Starbucks. So you can monitor it. Yes. Yes, you can lock it, but here's the thing, just a heads up, always watch your account, because if you add them as an authorized user, they can call and request for a card. So just watch that. Most of the time, it's still gonna go to your address though, so make sure you just monitor things. That's with everything. Monitor your bank accounts, monitor your credit card statements, and monitor your credit report,
Yes.
please.
This is the way you want to help your kid. Because it's tough. Oh, I want you to go sign the card, man. So like, no, I'm not gonna do that. Can do this. It will help make that easier for you. And
And they are easy to remove as well,
Yeah.
right? So say that your parent ends up at the hospital and they miss all these payments on the credit card and it hurts your credit. It's as simple as calling and saying, hey, I need to be removed from this account. And then calling the credit bureaus and saying, hey, this account was supposed to be removed. I'm not on this account anymore. Please take it off my credit report. So if damage happens, it's not permanent, okay? So just know authorized users can be very, very beneficial. We use them a lot whenever we're trying to purchase homes for people or even vehicles, sometimes business loans, depending on the situation. You just have to make sure that it's somebody you know and you trust, right? Whether it's a business partner, say they are that business partner with a good credit and they have a $20,000 limit on their credit and you don't. Well, ask them. If you're willing to do business with them, you can ask them to be an authorized user on your credit card. Just tell them, hey, I don't want the credit card. I just need it for my credit report to get my credit history up. I've had that happen so many times and I've not had one single business partner say no to somebody because they know it's going to benefit them in the long run as well.
so if you're a young business, like brand new, or you're a person that's trying to build their credit, you start with what you can do. Maybe there's only, in your toolbox, you only have 2 or 3 or 4 things you can do strategically. Start doing them now. In a year, maybe something else becomes an option that you didn't have before. Like that bank may not want to give you even $1,000 loan the first time you walk in there and ask. But I think they may want to see some experience and have some transaction history to work with. And so you do what you can do now, but you have to actively work to build that up. Like I mentioned, my son went and bought his first car for the credit union. Well, he had actually went there time to talk about other things with him. That's the first thing he was doing. So even that time, he had already knew somebody that had a couple conversations, and they recognized him from just stranger, right? So that is very important. And if you're ever going to get to where you can get the quicker answer and take advantage of that opportunity that pops up, you have to start that conversation somewhere early and be consistent and strategic about it.
So just make sure with authorized users, it's low utilization and no late payments. And if you have children and you're trying to build their credit, start adding them when they're 16 or 17. So that way it's reporting correctly by the time they're 18, they can get their own stuff. You don't have to add them when they're like 7. They're going to get the same history either way. So it doesn't matter. So wait until they're like 16, 17. Okay, utilization. I kind of spoke on this a little bit earlier. So if you have a $300 credit card and you use all $300, that is 100% maxed out and that will hurt your credit score. Once it goes over 30%, it is going to start hurting your credit, right? So at $90 on a $300 credit card, that is going to hurt your credit. $90 doesn't seem like a lot, but they don't care about how much that dollar sign is. They care about the utilization factor. So for all of my clients, I keep my clients between 1% and 3% of the utilization from your card. So that would be $3 to $9, okay? This is different, of course, for every single credit limit. So if you ever have questions on those, just let me know. But credit utilization, like I said earlier, is just as important as like payment.
Absolutely, but I will kind of make something kind of clear. That's utilization at the end of the billing cycle, right?
Yes, on
So
your
you
statement
can
close
use it,
date.
I mentioned you can easily make a couple of payments in a year, month. So use it however you want, but then, right as it down to the end of where it's gonna close out, that's when you want to drop it down.
Yes.
Now, it's a bit of a pain, I'm not gonna lie, right? But I got a card, and I'm gonna put on this Spotify or whatever. Okay, well, that's because I want the card to be used. You know, I want it to show up and have some activity. And then, you know, even if I, you know, and I'm paying the minimum or whatever, it sets up automatic payments. And so it'd be nice if you had your Netflix and your Spotify all on one card, right? That'd be real convenient. So you can see it all in one place. But that may not be the best way to use the credit you have and maximize your score. So sometimes you just want to have a couple of things in different places, make sure it's not it's being paid on time and you keep, and you're aware of the closing date.
So, yeah, so your statement, you have your minimum due date, right? That's whenever you're supposed to make your payment so you don't go late. Your statement close date is typically 2 to 3 days after that. So a lot of people, right? My mom is a great example of this. She was so mad. I built her store, okay, and she's in the 800s now, and I'm very proud of that because I taught my mom something, right? But for that, she could not figure out why her credit score was decreasing, and she was paying her credit cards off every single month while she was paying them on her due date. Well, what would she do the very next day? She would go and start paying bills again. So whenever her statement close date reported, it was reporting that balance and not the balance that she had when she made her payment. So with that kind of goes into how you were saying, like, if I'm 5 days late, hey, it might benefit you more, a little bit more because you're paying it by your statement close date. So you always look about in your credit card statement, typically on the right-hand corner, maybe Federal's on the left. You can see your statement date, your close date and your open date. So for me, I have smart credit for myself and my husband, and it automatically notifies us when we need to pay our credit cards by our statement close date. Of course, I have an auto paid for my auto pay, like my minimum due date, so it doesn't go late and I don't get a late fee. But you always want to make sure that that statement close date is handled. Here's another thing. If you're doing like what Chuck says and you're paying it a couple of times during the month, for example, Apple is great. If you have an Apple card, it's great at showing you this, and it's just a really good example. But with Apple, if you make a couple of payments during your statement, right? Then at that point, you don't have a minimum due. You don't have a minimum amount due because you've made that already during that statement. So then the only date that you have to worry about is your statement close date. But if you're not paying it several times like a month, so with my clients, most of my clients, whenever we're doing credit building, you're getting a $300-400 credit card, right? At that time, it's easy to use it pretty much every week. For me, I could easily, I mean, gas right now is taking a $300 credit card. So I told my clients, hey, if you get paid every week, then I want you to pay that credit card off every single Friday, right? That's not only going to cover the minimum due date being met, and so it'll show that they have $0 due, but it'll also help build the credit limit on the credit card. Because if you're using it and paying it back so many times like that, they're going to think that you need more credit and they'll give you a credit limit increase. But then the only date you would need in your calendar would be that statement close date. Yes, that gets, and it's very confusing, right? It's all a game. It's all a game. Do you see like how I go back to like the Experian being in the Dublin, Ireland? Why does it not just report on your due date or the day after, right? Why is it 3 days later? Capital One is 3 days later. So just always review that information on your statement. If you have issues trying to find it, I can always help you as well.
Now, 0% is not always optimal.
Right. What happens whenever you pay off an account? If you pay off an auto loan, what happens to your credit score? It drops. If you pay off your mortgage, your credit score drops. If you pay off that affirm account that I was talking about earlier, it drops. So anytime that's why you hear people say the credit system is made to keep us in debt. Well, I can't disagree, right? Why do I not get a pat on my back? I just paid off 40 grand, right? That's not how it works. So with credit cards, it's the exact same way. I would rather you leave $3 and report that $3 than you report me.
All right, so some of the hidden, I guess, areas that you may not be expecting, why you want to. We know we might want a loan, but we may not just want the loan, we want better terms. I mentioned them. Right? Lower interest rate, better terms, that type of thing. These are the kinds of benefits that are kind of obvious after you had, you went through and prepared and. Right? I would say that for me, the higher credit limits, you said, the goodness, if you're paying things off and you see it, they'll start, every time, every 3 months or 6 months, they'll pop up and add more to your credit score. Well, I'm not really using it, but one of these days, maybe I need to, at least it's there, right? And it helps you with the utilization. So, when you hire the credit score, that'd be lower interest rates, but this is true, like we had mentioned it, but I want to remind you that your car loan, you may have great credit, right? But your car insurance, well, now they decide what rate they want to give you based on your credit score, right? So like some people may not have really bad credit, they just don't have any credit. They've always worked with cash and they're just sort of hiding, like, a depression era person who's got their cash into the mattress, right? And so it sounds like they're doing great. They don't have problems, but they're going to pay more for their car insurance than me or Cassandra or someone else.
Apparently, if you're bad with your finances, you don't know how to drive either, but
They never,
You know.
every justification they make.
I don't know if I agree with that.
Yeah. So those are the types of things, or landlord, you're trying to get, maybe I don't know if they can affect the rent necessarily, but you definitely could not get the primary place you want to move because they see something that makes them more nervous, and that landlord is going to be looking at much they don't know.
100%.
Yeah, these three different applications came through, and since I don't know where it's at, it doesn't seem to have any kind of history. I'm gonna go with this other individual instead, so you miss out on the house.
It won't change your rate on your rent,
Yeah.
but it will
Your ability to get it.
change your ability. And I see more and more investors offering second chance mortgages in unsafe neighborhoods. Or not second chance mortgages, second chance rentals. Right? So if you have rented somewhere and you say you moved out and you broke your lease and they put $6,000 on your credit report as a collection for breaking that lease, or you damage the house or whatever in the process. And that comes up on tenant tracker, or it comes up as a collection, like McDougal uses Hunter Warfield, right, for their collection agency. So if I am a renter and I see that you've broken a lease before, the last thing I want to do as an investment in a property owner is have to deal with another eviction. So if they have a home in a location that won't rent, they may take someone as a second chance rental option because they can't get it to rent out to anybody else that has decent credit. That's what I'm seeing a lot of. I even got off the phone earlier with an individual who has a collection from an apartment for $11,000, right? And she cannot rent anywhere. She has 25 days to get out of her mom's house. What are we gonna do? We can't fix credit in 25 days, period. So in that case, she specifically said that the home that she's going to have to rent is not in a good area, and she is concerned for the safety of her and her kids. That happens all the time. Those are really cheap investment opportunities for an investor, but they will take advantage of it, especially with somebody that has no other option if they can't get a rental home on a normal basis. So yes. Yes.
All right, so one thing I know, I want to give us a chance to maybe ask some questions about the paperwork here. We mentioned a few things, but one thing that has not been brought up is whenever you're trying to build business credit, it's extremely important, critical, that you are keeping your personal finances separate from your business, right? Separate bank accounts, separate information, and that's because that bank, they got to ask you 2 questions, right? What kind of person are you? And so if you have your information straight and organized and can answer basic questions, that helps them feel more comfortable. They give you a business loan, but also from the business perspective, they need to know, well, how much is the enterprise going to make? And they need to be able to answer those questions. So the only way you can manage that or even know that is if you're properly keeping it separated on the back end. So we haven't really mentioned that necessarily, but I do think it is it could often be the deciding factor. I've had a couple of clients that came through and they have a handful of different businesses. And you sit down and start talking to them, oh, that business pays for that, or this one pays for this, and this and whatever. And it's not no big deal, but it could be the difference maker between the business.
I think we have those reversed.
The make, still comfortable giving you another one sometimes, because it kind of feels a little bit too much. Yeah.
You go back to that screen that you
Yeah.
had, because I know there was a quote I was reading in the bottom.
Yeah.
I was,
And we had those two slides reversed, Chuck.
Oh, we did.
Yeah.
Yeah.
You need to form a business first before you
Yes,
have
yes.
business finances.
I was
Yes.
a little reading strategic reminder, and I got the business credit and.
Yeah.
So-
Yes. It's not a replacement for cash flow. So that goes back to the credit card stacking, right? Please. What did I say? And we had a live on Facebook, like what, a month ago at this point? And one of the things that I said was, do not go into debt to start a business. I mean, be very, 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 very careful. If you do not have a business plan, if you do, I mean, I understand some situations you may need some kind of business funding, but be very careful and make sure. Just because business plans, if you have not thought about them carefully, or if you have not used Chuck and his resources, then you may not have a good idea. Trust me, I thought I had a really great idea and ran it by Chuck, and it turns out the place that I was looking at leasing doesn't have great road frontage. What was it? Street frontage. What'd you call it? They do research on, like, if you're trying to get a brick and mortar, they do research on the traffic and like how much exposure you get.
She wasn't going to see the top of the for traffic that she needed out of that location.
Yes.
And access from that. So.
So that's the kind of
It
stuff
was
that
the high dollar rent, it was the higher cost of the place. So.
the foot traffic was not gonna give enough to cover the lease. So that's out of, and it's still for lease, actually.
All right, so separation of business and personal, also from bank point, we had a representative, you guys say, the business banker, the loan officer, that's different than the personal loan officer. They kind of have different things that are going on. So you just, because you have a great relationship on the personal side, you got to build the business part of it as well. And that person needs to know your business. You got to tell them a little bit of it. You got to tell them all the good, of course, but if something's going on that you're dealing with, they need to know your challenges as well. Because that way, if you only tell them good, and then you come and say, my machine broke down finally, I've been trying to deal with it, and now I need you to give me $1,000 for the machine. They need to have understood what you were dealing with to likely get. I mentioned the vendor relationships, absolutely. And there are a couple that we mentioned that also personal credit agencies. There are agencies that report your commercial. It's public information. And so anybody can go access that and see exactly how on time you are making your payments and how much you owe. So those are used by a variety of people. I know we're kind of running out of time, so I don't want to go too deep, but these are other aspects. And it's really an extension. You're extending your personal credit. That's all going to be. I can reiterate that will not get a business loan, no matter how big the bill is, if your personal credit is a problem, right? And so you've got to kind of take that first step, and we can go to the next slide. And I think there was one other thing I wanted to make sure to mention.
Make sure your business is formatted
Oh, yeah, so you
correctly.
jumped ahead.
Yes,
The first
we
thing
had
we
this
had,
first.
we did that. Okay.
Yeah,
So the next slide is about make sure all your questions, right? Everything is lined out, because you're not gonna get anywhere. No, even if you don't all these things in the credit, like I said.
I've been like
you
trying
gotta
to-
They're following your credit, and then your documents all out of order, that's owned by so-and-so, or that, my other company pays for that debt, and it's just complicated. And so whenever you come into that situation, without your documents in order and you answer questions directly and clearly, then you're just going to limit your options as a business owner. Okay.
Yes, we can talk about this.
All right. Well, so that's way big deals coming. It's still there. Free number. It's kind of like it's like your way your credit report is for you personally. You've got all of your information. There's certainly people that you work with that will report to that. Also, you want to make sure that, and maybe the local vendors that you work with don't, that's okay. You can have local vendors, relationships as well. But you might have things or some other type of reporting. If you can do that, maybe it's internet, maybe it's whatever. You make sure that you put that into your profile so that you'll get some reporting.
The ones that I like to start out with are, if you're a new business, typically the ones that are doing your, like your promo items, your t-shirts,
Yes.
things of that nature. They'll typically do a 30, 60-day net and they'll report it to your business credit. But you need to make sure that you have that DUNS number first.
Yes.
Right?
All in this order, because, yeah, they'll report, and also it's gonna be the team again. I mean, you're gonna start out with your t-shirt person, 10 years from now, I mean, you wouldn't want that to make a difference. Instead, it's gonna be your other lines of credit or something that you've got.
And your cell phones, they will report to DUNS as well. If you go to the Duns and Bradstreet website, okay, you will enter your name, you'll enter your business name, your address, very basic information, your EIN. What they do is they verify your business, okay?
Okay.
So whenever you're signing up for your DUNS number, I typically like for my clients to have their website and their business number already created. So whenever that representative from DUNS goes to verify your account, you can find it.
Who's that?
DUNS is done, they're Duns and Bradstreet, and it's basically a data furnisher, just like Equifax, Experian, and TransUnion. However, it's more for the business entity versus, like, as you see, TransUnion's not on here, right? So TransUnion does not have anything to do with business credit whatsoever. And it's a totally different beast.
Yeah.
It's a totally different beast.
And they track other things too, like picking up the revenue and whatever other information you can get to, that's not gonna show up on your personal.
And whenever,
Person I've ever heard.
yeah, and whenever you register for it, they typically try to sell you something, okay? So just a heads up, but they have the free number and that's all you need. If you want to do the paid version, that's absolutely fine. They'll add a trade line onto your DUNS number and you'll get a score, right?
And
But-
you look at other people's scores, so if you're trying to make some
Yes.
decisions about something, you've got a major customer, that's probably how I would use it.
Mhm.
If you've got a customer, I don't know a whole lot about this customer, I think it's a good idea. You could explore their number and you feel a little more comfortable about it.
And with Experian, you can search your business name. And like for me, there's several different options that pop up, right? But above my business that is registered correctly, it says with trade lines in yellow. Okay, so that's the report you want to purchase. Business reports are more expensive than personal reports. So
Oh,
that's another thing. You still have to pay for it. You can do an annual subscription with it. Typically it's cheaper to do the annual than it is to do a one-time report.
I don't know if it's true, like, years back, it was easier to correct that stuff too. You could, but is that true now? I don't know if it is.
I would say, I feel like the business industry is getting stronger, just like the credit industry. I mean, just like back then, you could go, and of course I wasn't in the industry, but just from what I've learned from my mentors, you could just sign like a form saying like, hey, this isn't in my account, and send it to the credit bureaus and they remove it. So I think everything is getting stronger, even down to verification for like complaints, right? So one of the websites that I use for complaints, they are now putting in the aspect of like ID me. So have y'all ever had to use ID me for like the IRS website?
yes.
Yeah, so they're even implementing that kind of situation because there's so many fraudulent complaints that are made and all the identity theft situations. But the credit industry is kind of newer. If you think about it, it's only really been around like what, 40, 60 years really? And technology, I feel like, has grown astronomically just even the past 3 years. I feel like I can't keep up with it. So a lot of the credit bureaus now are all generated by AI. So whenever you're sending in letters and things like that to work on these items, it's not a person reading it, it's a computer. And these computers are very, very intelligent, and they almost to the point where it can't even help you, right? If you are in this bad situation, because it can't decipher the ones that are lying and the ones that aren't lying. So that is into a whole other spill, but yes, so it is getting more difficult to remove items. And you have to be careful with the addresses. If you try to get a virtual address, they are smarter than that. Don't be very careful with virtual addresses. You can get a virtual address, but a lot of lenders, they like to see real addresses. If you're going to have an entity in your house, please be honest with that you're working from your house. I mean, stuff like that matters.
So, we mentioned the phone, to me, that's some of the more basic things. If you go to the SBDC, that's trying to sit down and talk about why you should do one thing over another. I help you understand, if you have your own phone, you have your own identity, you have a profile on group, all of these things, the more you set yourself up for verified and seen as legitimate and an active business person, the greater chance you're gonna have to get the end results you want with regards to credit. Now, we're gonna have to pause, I think, but like the other bigger, kind of a lot of things to prepare. Some of the last couple slides are some of the programs and options that become available to you if you've done those types of things we discussed, right? So you cannot go get the 7A loan or the 504 loan at Caremark or something like that if you haven't taken care of some basics beforehand, right? And so I will just kind of leave that and say that this is what we're here to do. If you got a business, you're starting out and maybe it's a small loan initially, but you see a chance for something later, like a build it in a year or whatever. The sooner we start having that conversation, the greater likelihood we can get you the result that you want, right? And it takes months really to put together the kind of program, business plan package that you need to get the answer from the lender. And we might need to make some adjustments or changes that and it might take some time to do that. So I would just say that those are the items that we can help you with individually. Since we're very personal, feel free to do an appointment through me at SBDC, and we'll put together an action, some next steps and get you on a path of direction that you know. Okay? All right. I think that pretty much gets us. So you might put the very last one if you don't mind, so that it has a contact information.
And also on one of the handouts, I put our contact information down. Okay. So on the credit report worksheet that I handed out, this is like a basic repair guide, okay? I include the 4 most important laws. Okay, you use them steps 1, 2, 3, and 4. I have the laws listed in order 1, 2, 3, and 4, okay? Then at that point, I also provided an example of a dispute. This is a very basic dispute. Of course, this is one for late payments. So this is using the US code 15 and it's 1666B. Okay, so 1666B, but that's for billing errors, okay, late payments, things like that. So these are just a generic on this list of disputes on requesting for investigation, requesting for a reinvestigation, okay? And then basic disputes, right? Whenever you look into a credit report in more depth, you can find violations. You can go into the specifics, like if it's a repossession and they didn't let you know that they repossessed your vehicle. There's so many more laws that we use to truly dispute an account, right? Where you don't just use these 4 laws. Can you get results with these 4 laws? Yes, you can. But sometimes you have to do some more investigation. And then on the back side, I kind of go through it, right? And I give you the details. You need to analyze, you need to prepare, you need to look at the laws, then mail them. So I include how to mail them. Make sure you certify your very first letter. You don't have to certify the rest. We need proof of the very first request of investigation. And then you need to refill your credit in 30 days. Okay. And then from there, you want to double check on your report, see what changes have happened, and then you need to continue to repeat the process. You need to think it's the repair process as not aiming for deletions right away, but as an investigation and research process. Then at that point, all of that research and the information that you find throughout that process, you then can use for yourself and against that company to get it off your credit report. And then, of course, it has our contact information. So if you ever have any questions, you can reach out to myself or Chuck. So business questions, business formation, that's really Chuck's thing. And then, of course, if you need business credit help, we're both pretty decent. He's more decent than I am on business credit. I have about 14 clients right now that I'm building their business credit as like a trial and tribulation kind of thing. But those specifically, I am good at consumer. And then, of course, if there's just any business questions that you're like, hey, I'm not for sure if I should do this, and, you know, just being there for you for that part. But thank y'all so much for attending today. We appreciate it. Do y'all have any questions for us?